Hello traders, welcome to the video. Very quick strategy that you can use to trade the volatility index market. So this is not a scalping strategy. We are swing trading with this strategy. We are combine price action along with these indicators that you see over here. If you look carefully on my chart, this is 4-hour time frame and this is volatility 10. So this strategy works on all the volatility index market and also on the boom and crash and the forex market. But you need to understand everything I say, and then you need to be flexible so that you will know exactly when to enter the trade and when not to enter the trade. Then you need to practice this very well because it will require time before you get it better. So this strategy will be using just two time frames. We will be using the 4-hour time frame, which we will use for analysis, and then we'll use the 1 hour or the 15 minutes time frame for our entry. Don't worry, I will show you how you can do that. And for the zoom level, one thing you want to do, you want to zoom into the maximum. You can see over here. So if you look down over here, I have just two indicators. I have the stochastic oscillator. I also have the moving average. So to set up your indicator, click on this indicator icon over here. You can see I have just the stochastic and the moving average. For the stochastic oscillator, click on the F icon on the main chart. Scroll down a bit. Stochastic oscillator, click on that. Make your K period to be 60, D period to be 1, slowing to be 1, price field to be close, method exponential. For the styles, make it 3 pixel and select color of your choice. For the levels, click on this pen icon, add level, type 15 and 85, style, 2 pixel and select color of your choice. After that, click on save. For the second indicator, which is moving average, click on the F icon on indicators Windows 1, moving average, click on that. Make a period to be 10, shift to be 0, method to be exponential, apply to low, style 3 pixels, select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. First thing you want to do is to go to your 4-hour time frame. Then you want to draw out a very perfect trend line. And I draw this out. This will be the example I'll be using for this strategy. First touch, second touch, third touch. So we only need 2 touches. So the third touch will be where we enter our trade. So depending on the movement of the market, so that is when you know the time frame that you will use for your entry. So if you look over here, you will see that there is also another trend line forming around this point, and this is intermediate trend line. So then you will drop to your 1-hour time frame. So for the entry criteria, one thing you want to pay attention to is the 85 and the 15 level. So the 85 level is the overbought level and the 15 level is the oversold level. When this stochastic oscillator enters into the 85 level and crosses the moving average, that is a perfect condition to sell to the downside. And when it enters into the 15 level, you can see over here, and crosses, then this is a good condition to buy. You see how it buy into the 85 level. You can see that this moving average did not enter into the 85 level even at the second touch. So you will drop to your 15 minutes time frame. So you can see over here, you see how this second touch pushes the stochastic oscillator into the 85 level. So you know that the third touch is likely to push it also. So you can see over here at the third touch, here you can also draw out a counter trend to make your entry more accurate. So once you have market breaks below this counter trend line, you can enter a sell. Stop loss will be above this high. Then your target will be the 85 level or this swing low that causes the touch to the moving average. So you can see over here, comes to retest this block, drops, retest this block again, and then it melts to the downside. You can see over here and hit our TP. Hope you understand what I'm saying. So let me go to the volatility 25 and also show you example over there. So what do you do first? You go to your 4-hour time frame and look for a very perfect trend line, a trend line around this point. First touch, second touch, third touch. So this is the current market. You can see over here, candles are still printing. So we also have intermediate trend line. Here we go to 15 minutes time frame to take these trades. But we can see that these are major trend lines. 3. It is not this intermediate one. So once you have that, then you drop to your 1-hour time frame. Like I said, the intermediate is 15 minutes time frame. The major trend line are the 1 hour time frame. So if you drop to your 1 hour time frame, so you want to look for the second swing, the time frame where it pushes the stochastic oscillator and the moving average into the 85 level before you sell to the downside. So you can say that you have the second swing pushes it at the 1 hour time frame. So if you don't see this second swing push it into the 85 level at 1 hour time frame, you will drop to the 15 minutes time frame and look for the push. So we have it on the 1 hour time frame, so we know that it is likely for market to push enter into this level again in the third time when it is touching the moving average. So you can see over here you have it cross and dropping at this point, so you will enter a sell. You can first do your counter trend line. So over here you have a break. Once you have a break, you have a cross, then you can enter a sell. Stop loss will be above this high. You see how market comes to retest a particular order block and it is dropping to the downside. So your target will be this level over here. Hope you understand what I am saying. So everything I am saying here is opposite to when you are buying to the upside. So let's look at the volatility 75 for our last example. So this is volatility 75. What do we do? First, we go to our 4-hour time frame. So we want to draw out a very clear trend line. So you can see over here, we have a clear one at this point. First touch, second touch, and we anticipate the third touch to take out this high. We see that this has already played out. So if we go to our 1-hour time frame first to look for entry, so first thing we do is to pay attention to this second touch of the trend line. So we see that it enters into the 15 level at the 1-hour time frame. So we anticipate that the third touch will also enter at the 1-hour time frame. So you can see over here, this is the third touch. You can see how it enters into the level. So you can draw out your counter trend line. So once you have the break like this, you enter a buy, stop loss below this low, and you target this high. You see how market takes out that high. Market come, we test a block around this point, then buy up to this level. Now if you go to your 4-hour time frame, you can also trade these trend lines. You can see over here, but you need to go to your 15 minutes time frame and take entry. Why? Because these are intermediate trend lines. So this is the main trend line. This is also the main trend line. So that is all I want to show you for this strategy. So after this, I want you to go back on your chart, backtest this strategy, go as far as you can and see more examples for yourself. To go on your demo account and trade it in a live moving market, test this strategy for at least 2 to 3 weeks and determine your win rate and also see how profitable you will be. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.